the Central Bank of Kenya is actively looking into buying gold. In fact, our CBK governor was talking about how they are looking into destinations where they can store this gold. And the Bank of England is one of those destinations. And I quote, "We've talked to the Bank of England and other banks to see how we can go about it, where it will be stored and those kinds of things." This was in an interview that he had in Washington. Now, the question that you might have is, why would the Central Bank of Kenya want to buy gold? And two, why would they want to store this gold in an offshore bank? Why would they consider England, the UK? Why would they consider the Bank of England and not store this gold? The simple answer to that is that there has been an ongoing trend across governments. So not just African governments, but also Western governments. We've had the government of China, we've had the government of Russia, and even here in Africa, we've had the government of the Central Bank for Rwanda, the Central Bank for Zambia, we have Ghana, we have Zambia, that are also making that move. They're going towards the gold direction. They're thinking about, they're even actively buying this gold. So there's that fear of missing out, that other governments, other central banks are buying gold, so why should we not buy this gold? But the real answer is historical. We're going to look at the US dollar because it mainly influences the price or the demand for gold. Also going to have a look at historical information that is linked to Saudi Arabia, that is linked to oil, and that is linked to the World War. It's going to be interesting, so buckle up. Now, the answer to the second question as to why we would consider storing this gold in England, in the UK, is because of the safety. We are literally buying bars of gold and they need safekeeping. They need vaults. They need insurance and it's costly. And that type of infrastructure is not here in Africa. We trust these governments. And even some of these countries, some of these African countries like Uganda, they also store their gold in the Bank of England. So it's not something that is new. It's something that most governments, especially African governments, go to Western banks to store the gold for them. Other than security, in case our government would want to sell this gold to another government, it's easier to sell this gold if the gold is in an offshore account. Think of it this way. If China came to us, or if we are selling our gold to China, or we are selling our gold to France, for example, all they have to do is just give us the US dollars because because gold is mainly traded in US dollars globally. We're also going to tackle that. But it's easier for the Kenyan government to sell the gold to another government if the gold is in a bank like the Bank of England, because that is where the main market is. Now back to the first question. The US dollar is linked to gold. This image shows you how central banks globally have been buying gold. Don't worry, I'll simplify it for you. Anything that is in blue, any blue bar represents a purchase. So it's like the Central Bank of Kenya buying gold. Anything in purple represents a sale. So that is Kenya selling the gold. And the line, this line here that you can see is just showing the net. That is the sales minus, no, that is what the governments are purchasing minus what they are selling. And you can see that the line, that line mainly lies on the blue side, is mainly on the upper side. So most central banks are buying gold according to this graph. And the source is the IMF, and this is data from January 2022 to August 2025. So you can see that central banks across the globe are buying gold. There's something known as a reserve. A reserve is an asset that a country holds to give them financial stability. It's an asset that is used to stabilize the exchange rate. View it as an emergency fund for a country nationally. Most reserves across the globe are in US dollars. That is the first type of reserve. So the Central Bank of Kenya has US dollars. The Central Bank of Tanzania has US dollars. The Central Bank of China has US dollars. The Central Bank of Uganda has US dollars. And this is because most of the trade that happens globally is usually done in US dollars. Think of it this way. When our government is trying to buy medicines, let's say vaccinations for children, which is a national expense, we are going to purchase that vaccination or those vaccinations in US dollars. So we need to have those US dollars to pay the suppliers. When Kenya is buying oil, crude oil, when Kenya is buying petroleum products, we have to pay for that petroleum in US dollars. We don't pay for it in Kenyan shillings. That's just how the global trade works. We will look at that and why the US dollar is the main currency. But that's just it. The other type of reserve is gold, which is what our Central Bank of Kenya is trying to do here. Now, most countries hold US dollars than they hold gold. And gold is traded internationally in US dollars. So if our central bank is going to buy this gold, they are going to pay for it in US dollars. The reserves that we have in US dollars are now going to be converted to gold, the other reserve. So the reason why the government is currently making this move, apart from the fear of missing out on what other governments are doing, is that they are also trying to diversify the reserves that they have. So the real question that we should be asking is, why are central banks across the globe moving towards gold, such that our own central bank also wants to move towards that? It's what is currently happening in the US. There is an anticipation, or there is an expectation of instability, economic instability. And this economic instability is related to politics, the politics of the US. You saw the tariffs that were being imposed in countries across the globe, in China mainly. So we've seen a trade war between China and the US, which then affects trade, imports and exports. Now, anything that affects the US, their economy, will also affect the US dollar. Just the other day, we had the US government shut down because their parliament, that is their Congress, could not agree on a budget on how to finance government operations. And also the interest rates in the US, that there's that expectation that the interest rates will fall down. Remember, anything that affects the US economy also affects the value of the US dollar. So in this case, if the interest rates reduce, by interest rates, we're talking about you investing in their bonds. If the interest rates go down, you as an investor, the return on the bonds also goes lower. Think of it this way. If I was to invest in a government bond and the returns go down, when interest rates go down, they also affect the rate at which you take on credit, you take on loans. So eventually, if most people can be able to access this money that is being given out in form of loans, eventually there's usually that expectation of inflation, where more money will be circulating in that economy, which will drive more people to spend, more people to invest in other investments other than the bonds, which will lead to inflation. So if you invested in that bond, and remember that bond is locked, and inflation goes up, it's like inflation is eating up the interest that you're going to receive from that bond. Inflation is eating up the value of your investment. In such a case, most people would move away from investing in that country and move towards the gold. Gold is a store of value. So there is that opposite reaction between the US dollar and gold. When the value of the US dollar goes up, most people would want to invest in that country because the returns would be more. But if the value of the dollar is expected to go down, most people would run to gold so that they can lock in the value of their money in gold. So there is that uncertainty over what other countries have witnessed happening in the US, that they want to move away from the USD. De-dollarization. They want to move on to gold because there's no country that produces gold. There's no country that manufactures the paper, like the Kenyan shilling paper. It cannot be manipulated. You cannot manipulate the production of gold, but you can manipulate the production of the Kenyan shilling. You can manipulate the production of the US dollar. So that uncertainty across governments, and what is currently happening, that you can't predict specifically what the current administration in the US is going to do, that unpredictability is what is making it attractive for other governments to go and diversify towards gold. And that is what has been happening. We've had countries like China, we've had countries like Russia, and these are superpower countries that have been diversifying. They have been amassing gold. Let me just show you some of the countries with the largest gold reserves. You can see that the USA tops the list. Again, the USA has the largest gold reserves, and this is as of October 2025. We have Germany, we have Italy, we have France. I'm trying to look for an African country, but I can't find any. But you can see that all these countries have gold. Now, the other question that you might ask is, if governments like the Central Bank of Kenya has the US dollar and now they're trying to de-dollarize, or these other countries are trying to de-dollarize, and they're moving towards gold, and we've seen why they're trying to de-dollarize, then at what point in time did we decide that the US dollar should be the main gold reserve? At what point did we say that all countries across the globe, when we are conducting trade, when you are buying a car from Japan, it's quoted in US dollars, you have to pay it in US dollars, but now you have to convert it to a Kenyan shillings equivalent because now you have to trade. That's the importance of a country having US dollars. That when a country is importing wheat, when a country is buying flowers, why do they have to pay in USD? Now, it's historical. So let me just give you some brief historical context here. In 1944, before the World War II ended, we had a number of countries, around 44 countries, that met in the US in Bretton Woods. And these countries sat down and agreed that they would peg their currencies against the US dollar, that the US dollar would be used to say, hey, 1 US dollar equals to 130 Kenyan shillings. 1 US dollar equals to this amount of pounds. And the reason why they chose the US is because most countries in Europe had their economies devastated because they were fighting against each other. And the US was the main creditor. The US was lending money to these countries to reconstruct their economies. The other reason is because the US then had the largest reserves in terms of gold. In fact, the number is 70% back then, but not now. So they decided the US is a superpower country. They've not been affected by the war. They've been lending us money, plus their economy was stabilizing. So that largely influenced why countries should have the US dollar. But this also became more prominent in the 1970s. We had the Arab-Israeli War. And in 1967, that is years after the World War II ended, Israel was fighting against Arab countries and they won the war. They managed to settle in some of these Arab lands. In 1973, we had Egypt and Syria, which are Arabic countries. They went ahead and attacked Israel. Now, the US and other Western countries, the Western European countries, went ahead and offered military support to Israel. They went ahead and offered them aid. Saudi Arabia, which is the largest oil exporter, imposed some restrictions on this oil being exported to them. So countries like the US, countries like some of these countries in Western Europe that were heavily reliant on the oil that came from Saudi Arabia were affected. The economies were affected because now if there's a shortage of oil or just petroleum products, the prices for goods goes up because now the price for oil goes up and you're largely dependent on Saudi Arabia. So the US made a treaty with Saudi Arabia. One is that they would offer them military support. They would offer them protection, economic protection, military protection, because remember there was a war and Saudi Arabia is the largest oil producing country, the largest oil exporting country, and they heavily rely on oil. So they have to protect their oil fields. In case anything happens, in case a country bombs their oil fields, that's it. In return, Saudi Arabia was to price the oil in US dollars. Any country that wanted to buy oil from Saudi Arabia or these other OPEC countries, Saudi Arabia was to influence other countries that also produce oil to charge this oil in US dollars, to use the USD as a currency. Now think of it this way. If the Kenyan government right now wants to buy oil or wants to import petroleum, because we actually import that, we have to pay it in US dollars. So this treaty largely influenced other nations that need access, even Europe, that needs access to this oil to pay in US dollars. As a result, the US dollar became a popular currency, a reserve that you need to buy oil, that you need to conduct international trade. You can see it's about power. You can see it's about distribution of resources. You can see how the global economics and the global politics play. That even as today, as Kenya considers holding gold, that it's not just a financial move, it's a strategic move towards independence. Perhaps it's giving us a glimpse into how global finance is going to look like. De-dollarization. What do you think? I'd love to know your thoughts in the comments.